And I know times like this, you just take it slow. I fall asleep in the pillows. She got my heart in a chokehold. And there she goes.
Hello everyone, this is Ahmed Shawi by Liquidity Club. Today is Sunday, the 20th of August 2023. I'll be doing the weekly market review and I'll be updating on what the market has done lately. So let's start with the DXY. We have the weekly chart. As you can see, last week we have opened basically at the consequent encroachment of this weekly inversion fair value gap. We respected it. We traded a bit down, was just a mohawk, and then we traded higher, taking the weekly consequent encroachment and this buy side liquidity. Now going for the next week, I'll be looking for this weekly. If price wants to continue reaching for higher prices, I would like to see the weekly consequent encroachment and the high of this candle to offer some support, which might send us higher. So the weekly high, the high of the weekly inversion fair value gap, the high of this candle, and the weekly consequent encroachment might form some support that might potentially send price higher. Or else, if price wants to reverse and continue going lower, we will see that during the next week. Going to the daily chart, as you can see here, basically last week trading was all efficient. There's not much inefficiency below the market price where we closed here, and there's no liquidity pools other than this daily fair value gap, which could be utilized as a measuring gap. Anyway, so price might continue reaching higher for higher prices, especially we have a buy side liquidity that's resting above here. We have a relative equal highs that are resting here if price wants to continue reaching higher. This is just to show you that last week review I was calling for higher prices, and as mentioned here, the buy side liquidity here, the buy side liquidity pool is done, and we have already swept that buy side liquidity. So now going into the next week, you'll either have to be nimble and just trade the intraday liquidity pools, or just look for higher prices and look what the market is offering you and providing information. It's also worthwhile mentioning that after we take a buy side liquidity, it's either gonna be driving higher to the buy side liquidity or it's going to be consolidating. Now, if we consolidate here, it's a good signature in price action that we're going to continue reaching higher. But if we start trading lower immediately with the speed and magnitude, this is going to show us that we are actually going to reverse and try to go lower. However, if we, what I'm expecting now is we're going to be consolidating for a bit until the end of August, and then look for higher prices in September. Going to the ES, also known as the S&P 500. This is September contract. This is the weekly chart. As you can see, last week we've traded and closed below the weekly bullish proportion block mean threshold, the mean threshold of this candle, which would give us a confirmation that we are going to be looking and reaching for lower prices. And in fact, we did. We reached to the sell side liquidity, to the consequent encroachment of this discount wick, and for the sell side liquidity. We have a small inefficiency, a small fair value gap, and a small fair value gap that is resting here. So what's the next draw liquidity? You'll be looking for these fair value gaps as a means of draw liquidity a price wants to reach for. Now price might retrace a little bit, but I'll be looking for this gap to be partially unfilled. Why? Because this would be considered as a breakaway gap. If we start trading lower and reach for lower prices, which would be coupled with the DXY reaching for higher prices, we will be looking for this fair value gap to be partially unfilled, which will be deemed as breakaway gap. And the draw liquidity would be the fair value gap that I've mentioned earlier. Going to the daily chart, as you can see, we have swept the sell side liquidity that are resting here. If you look at it, the weekly discount consequent encroachment here on the daily chart is not actually the weekly discount consequent encroachment, and this is the importance of nesting your BD arrays from the higher time frame all the way low to the lower time frame, so you will be able to identify and know where you're trading and where you're looking at in your price action here. So price on Monday, we've traded to the consequent encroachment of this weekly inversion fair value gap. We've seen support, the bodies are respecting it, and it's just stopping at the consequent encroachment of this wick, of this consequent encroachment of this inversion fair value gap. We've seen a small body that is just trading above the mean, above the consequent encroachment, and is very normal. We expect this kind of signature in price action, and we started trading lower. Now going to the next week, we have an order block here, and you could be considered this as a bearish propulsion block, because we have a bearish order block here, and this is a bearish order block that goes below the mean threshold of this bearish order block and has a lower low here. So, and we have a small fair value gap here, so this would be deemed as a bearish order block, or bearish order block that's classified as a bearish propulsion block. Price might want to retrace to maybe this fair value gap on Monday, or this fair value gap that is now formed as we close on Friday, and continue reaching for these draw liquidities that are the daily fair value gaps. Notice that I'm nesting my BD arrays from the higher time frame. They were called fair value gap now because we're down to the daily. Excuse me, this should be called weekly fair value gap. I apologize for my mistake here. So that's pretty much it for the ES on the daily chart. I'm expecting price to retrace to some kind of fair value gap here, and then drive lower to these draw liquidity that were highlighted on the weekly chart here, these draw liquidities. Going to the NQ, also known as the Nasdaq. Last week we traded higher, basically balancing out the potential fair value gap that was about to form. Now in the ES, it didn't form, it went up higher to the consequent encouragement of this wick. However, on the ES, it was a bit heavy and it didn't reach to the consequent encouragement. So this gives us a signature price action that the Nasdaq is heavier than the ES, and it really wants to reach for lower prices. So there was a small inefficiency. You can go to your chart. It's not completely filled. There's about 1.5 handles that are yet to be reached and yet to be fulfilled. However, we've closed below the sell side liquidity, so I'm looking for this fair value gap. Notice that we have a small volume imbalance here, and we have the fair value gap that is resting here. So these would be as a draw liquidity for the upcoming week. Now, when we open, I would like to see price retrace a little bit. If price wants to reach and continue going lower, we might see this fair value gap partially unfilled. Going to the daily chart, as you can see here, last week we traded to the bearish order block, which overlaps with this consequent encroachment of this wick, the premium wick. This is the 10th of August. You can go to your chart and you can see it. Starting from the beginning, as you can see, I've already talked about this, how price has retraced and fulfilled this fair value gap that is viewed on the daily chart, and it's also the consequent encroachment of the monthly fair value gap. You can see that, and we started trading lower. This would be a breakaway gap. Price retraced to the less than the consequent encroachment of this fair value gap and kept trading lower. This volume imbalance can also be deemed as a breakaway gap. This is for your info. And we started trading lower, bearish order block. We traded to it here. We have this weekly bearish order block that is viewed on the weekly time frame. This is the weekly bearish order block. We traded to it. As you can see, the bodies, how the bodies are respecting it. Traded lower, bearish order block, traded to it, and now we have another bearish order block, and we have small fair value gaps here. This fair value gap and this fair value gap. So going to the next week, price might want to retrace to these fair value gaps and to the bearish order block, and then continue going lower if it really wants to reach for this strong liquidity, which is this strong liquidity that is on the weekly chart, and you have these relative equal lows that are viewed now on the daily chart as a relative equal lows. So that's pretty much it for the NQ. Going to the Dow, which is named as the YM1 exclamation point mark. Last week we traded and closed below the weekly fair value gap, and we reached to the bullish order block. So now comparing the Dow with the other averages, as you can see, other averages has reached to the sell side liquidity here. However, on the Dow, we have yet to be reached to this sell side liquidity. So as you can finalize here that the Dow is the successor for the lower move or the down move here. So it might really want to go for the sell side liquidity here, as the other averages has done so. So price might retrace to this bearish order block or to this fair value gap. It might want to keep it partially unfilled and continue going lower. We'll see that during the next week and the future trading. Going to the daily chart, as you can see here, we traded and closed below the weekly fair value gap. Now going to the next week, you can see that basically everything is efficient here. There's a very small fair value gap here. However, here there is no inefficiency. There is a small fair value gap here also. There's a fair value gap here. Now price next week might trade above, reach to the weekly fair value gap low, and which is also this candle's low. They are basically overlapping, and then started trading lower. So the weekly fair value gap low might give us some kind of resistance that might send price lower. Why? Because there's a fair value gap here, so it's the high of the fair value gap. Also, it's the low of the weekly fair value gap that is here. So the weekly fair value gap is also the low of this, or the high of this daily fair value gap. So price might want to reach higher for this fair value gap, or maybe we might see the bodies stop at the high of the bullish breaker. It could be used as an inversion PD array, and we might start trading lower for these relative equal lows. Going to the Euro USD, as you can see on the DXY, if you rewind the video and you see the DXY, we've swept the buy side liquidity. However, on the Euro USD, we have yet to be reaching or yet to be sweeping this sell side liquidity, and we're very close to it. We have closed below the mean threshold of this bullish order block, so now it's more confirmed that price wants to reach for the sell side liquidity, and it actually was very close from reaching to it. So I'll still be looking for this sell side liquidity to be reached and for this fair value gap to be fully fulfilled. Going to the daily chart, as you can see here, we have the relative equal lows here that price might potentially reach to them, and we have this bullish order block that price might reach to it as a target. Keep in mind, BD arrays can be used as entries and BD arrays can be used as targets. As you can see here, we have pretty much it. There's not much inefficiency here. Everything's efficient. We have a very small fair value gap here, and we have a bearish order block. Notice how the bearish order block was utilized here. It was traded to it and traded away from it. So by next week, all I'm seeing is price wants to reach for this sell side liquidity. Pretty much it. The bullish breaker might form some resistance, the low of the bullish breaker, that might potentially send us lower to the sell side liquidity and the other drawn liquidity that I've mentioned and highlighted earlier. Going to the pound USD, also known as the cable, we have swept this sell side liquidity. I didn't mention that. I didn't highlight that in the chart, but you can see it, and you can go to your chart and you can see it. We've swept this sell side liquidity, and we are yet to be reaching to this sell side liquidity. So I still have the same outlook for both pairs, for the Euro USD, the fiber, and the cable, which is the pound USD. As you can see, there's nothing inefficient here. So price might want to consolidate here because we basically swept this sell side liquidity, and we have no liquidity pools that are resting here. Notice how we traded and respected the weekly consequent of this premium wick, and we've swept the sell side liquidity. It's actually important to note that in your chart. Going to the daily chart, as you can see, we have a bearish proportion block here. Price respecting it. Wherever price has traded to it, trades away, trades to it here also. But look at the bodies. The bodies are respecting the low of it, and it's not reaching to the mean threshold. And we're still consolidating here inside this range. This is a fake bottoming here that price is doing. Creating lows near the low is trapping retail into going long. This will build more liquidity below these lows, and especially this sell side liquidity, this low, that will trap retail into going higher. Now, if we break lower, this will facilitate and flush into the marketplace the liquidity that's resting below these lows, and which is what I'm expecting in the upcoming weeks. So that's pretty much it for this weekly review. I'll be touching and addressing on some points that we're now during August, and we've seen some good moves, which is unusual. During August, it's pretty sloppy price action and pretty sloppy moves and condition. But however, for this August of this month, we've seen some clean and readable moves. Price wasn't moving in sloppy price action. It was going to what it has been intended to do, going from buy side liquidity to sell side liquidity, from inefficiency or from discount to premium, and from premium to discount. So it's pretty interesting to see that happening in the marketplace, and it's actually important to note and journal that, because in the upcoming years it's not going to be the same, because August is known as to be sloppy condition and irregular price action that is most of the times irreadable, and it's hard for you to predict what's the next drawn liquidity. So that's pretty much it for this weekly review. I hope you learned and gained something from it, and until I talk to you next time, be safe. Wassalamu alaikum wa rahmatullahi ta'ala wa barakatuh.